But, Joe, there are fresh worries about the jobs market coming from yesterday's filings for jobless claims. They numbered a surprising 898,000, reflecting a round of recently announced layoffs and maybe some surge in the coronavirus. But there are increasing concerns that the claims numbers could also reflect errors and even fraud that would still make the job situation troubling, but perhaps less troubling than it appears. Here's some numbers that we put together using my calculator. The latest data show that 25.2 million Americans are receiving some form of jobless benefit. That's either through the regular claims, the pandemic unemployment assistance, or extended benefits. But when you count the unemployed and those who have dropped out of the workforce since February, well, it's less than half of that at 11.2 million. The fact is, no one can really explain the difference, but there are concerns that there are repeated applications for claims in the weekly data that make it less reliable. Michael Gapin from Barclays says it's difficult to draw a firm conclusion about the signal from initial claims and what it says about the rate of job separation since the state of California announced a pause that's now running on 3 weeks, by the way, in its processing of initial claims on September 19th to reduce backlogs and implement fraud protection technology. If all that is true, however, it doesn't mean the job market is in good shape, just not as bad as claims make it appear. Even judged by the better numbers, we're still in the throes of a fairly severe recession. But it would appear the stock market, guys, is trading on the better take on the jobs market and maybe some coming stimulus, not the worst one. Joe?
So we always hear about polls and the margin of error. I mean, we'd be surprised, I think, on these numbers. And I guess we see revisions the next month that always bring home how difficult it is to get an exact read on on claims, on the big number every first Friday of every month and everything. And it's always a net number, right, Steve? I mean, not with the claims, but this is a huge economy. And you can try a lot of different techniques to get exactly at what's happening. But it's always, I keep saying this, an art, not a science. I don't think there's any science left, but it's an art, not a science.
Well, I mean, what's happening, Joe, is that I think the claims numbers are useful in the sense that when they go up, it's probably reflective of some weakness in the job market. When they go down, it's probably reflective of some strength. There's a big question about the magnitude. And as you know, Joe, before this pandemic hit and these unemployment offices were overwhelmed with all of these claims, claims were thought to be a very good and reliable immediate indicator of what was happening in the economy. Now, as you know, we've also turned to a lot of high-frequency data. That high-frequency data is more flat than down, but it's really showing that the pace of recovery, and there are a lot of worries now, Joe, about employment in the fourth quarter. The stock market, it's interesting. Some of this is happening, as you know. We have to get the jobs levels right for companies to be profitable to then go ahead and invest. Some of it, though, is definitely going to be a drag on the economy and the expansion.
Shepard Smith here. Thanks for watching CNBC on YouTube.